Hello, everybody. This is our first attempt at doing a live streaming event. I hope that you all enjoy it. I hope I have fun doing it because, quite honestly, putting this production together, there's so many different moving parts and pieces of software that it's a little bit intimidating for an old mind like mine. But the intention of doing the YouTube channel and this video is to educate you. That's really what this is all about. And I hope to have some fun in the process of doing these live events. You know from all of my other videos that I have a very serious tone. When it comes to trading, I'm very serious about it because there's so many ways to fail and so few ways to succeed. And so when you come into the live events, I'm going to be giving you some great trade ideas. I'm going to be discussing what the market backdrop is like, and then we're just going to have some fun and talk about some of the issues that traders go through. And the fact that you are here is a testament to how hard you're willing to work at trading, because nowhere in any of the information that I've ever posted are you going to see that trading is easy. Hey, come in here and make a bunch of money. It's so fun and it's so easy. The reality is that you can get that type of flavor from plenty of other gurus, but you're not going to hear it here. And I don't even advertise. What would I advertise? That there's a very high probability that you're going to be absolutely humiliated, that you're going to lose your money, that you're going to spend countless hours trying to learn and master this. That type of advertisement wouldn't generate any clicks. So all of you are here because week in and week out for the last 12, 15 years, you've seen me post videos. You've heard me talk about the systematic trading approach that I trade. I show you with real trades, and it's been a build it and they will come type of environment. And I kept doing that for about 10 years and people dribbled in little by little. But what happened 3 years ago or so was that Harry Seldon, as most of you know him from real day trading, came in, and it was during the COVID pandemic when the movie industry was put on its ear. Harry had been a trader for a long time, had found success, but was still trying to put all the pieces together. He came in, he saw what we do, he learned the system, and man, did this guy master it. He didn't just master it, he wanted to tell the world about it. So even though the system was conceived by me, Harry has been the one to popularize it. He's been the one spreading the word. And he didn't just stop there. He built an entire Reddit with hundreds and hundreds of articles. And you simply can't get that type of information anywhere else. And so a lot of you are from the Reddit community. Welcome. You may not know me very well. You may know me, but that's how all the pieces tie together. And Harry saw what we were doing in the chat room and he said, hey, you know, I want to be a part of this. I love being in this community and I love trading here. He runs my chat room and there's nobody else that I would entrust with it. And he's one of the very few people that posts his trades real time. All of them, the entries and the exits. He's a phenomenal trader. So Harry, you know, I couldn't have done this without you. I don't want to do it without you. So, you know, why don't you take the ball and run with it a little bit? Give people
Thanks,
a little
Pete.
flavor of what to expect.
Yeah, you know, a lot of people said they wanted to get some weekly videos. They wanted to get videos that are live. And to really see, because it's one thing to post trades and it's one thing to talk about trades, but to sort of see how we trade and how we trade in different markets at least once a week, and maybe we can build from there. And we can also answer questions as it goes, I think will help a lot. Look, there's 1,000 ways to trade, right? And you can see that those of you who watch myself or Pete or even Dave and others trade realize that we all trade differently, but we have the same foundation. right? We build off that foundation, and it's a matter first of mastering that foundation and then building from there. But what Pete said is true. There's no way around it. This is a minimum 2-year journey, and I don't care how long you've been trading for. People, I've traded for 10 years, 15 years. If you're profitable, great. Come here, maybe learn ways to expand your trading, right? Maybe learn ways to build on that. You can always be more profitable, right? But if you're not profitable, and when I mean profitable, I mean consistently profitable, and it's hard to wrap your head around that idea. And the best way to do that is to think of your job, right? For those of you who have a job right now. Some of you don't have a job and are looking at this as like, I need money, right? But unless, you're in a company that's firing people left and right, which these days, who knows? But you can rely on your paycheck, right? Unless something happens, you're gonna get fired or laid off. But unless something happens, you can rely on the fact that every 2 weeks or week or month, you're going to get a paycheck. And that paycheck is going to be of a set amount. And you can revolve your life around that, right? You can decide you're going to buy a house or you're going to pay rent on a place. You're going to get married. You're going to have kids. You're going to, whatever it is, because you have a certain amount of income coming in. And that income is more or less locked in for you. And you hope for a raise over time, but it's going to be a slow, steady progression. When I say consistently profitable, that's what I mean. I mean that you can count on your income from trading the way you can from a job. That it's not going to be, this month I made X amount, but next month, who knows? I can make this. I always say you don't want to see those wide swings. You want to be consistent, and there are many different roads to get there. So unless you were consistently profitable, and statistics show there aren't many of you, then this is a long journey. And you really have to see it, and I said this before, and I'll keep saying it, you really have to see it as if you're going to school. You're going to a graduate program, and the amount of time and effort and energy you're going to put into that. So now we can start looking at trades, but you'll notice here's a great example. Pete, remember, it was about a month ago, we were talking in the chat room about whether or not to take stocks in the lower right-hand corner or the upper right. Well, this morning you suggested CVS, right? CVS is
I think ConAgra.
So I think it would help people, maybe because that was one of your trades, and I think you should talk about that trade. I think people would love to hear about it. It's a great swing trade idea that Pete has here. One, why you think that's a great swing trade, and two, what the exceptions could be of a stock in the lower right hand as opposed to other times where you want to go in that upper quad.
Absolutely. So one of the things that I do want to backtrack a little bit on is Harry's 100% correct in that this is very difficult and that it takes a long time to learn. We're talking specifically about very short-term trading and day trading and becoming a professional trader. Now, that's where you have to be laser focused and very, very precise. Many of you are swing traders, and I'd say that the swing trading audience versus the day trading audience is probably 100x. So when you swing trade, many of you are working professionals. You can't watch the market all day long. So you need longer term positions. Perhaps your time horizon is a month, 2 months, 3 months. You want to be active in the market. So you're not necessarily in there doing hand-to-hand combat every single day. And that's also an easier way to transition into day trading, because a lot of the same technical analysis that you do on a longer term basis is going to apply to a shorter term basis. And so when we start taking a look at the chart, and yes, this morning I had mentioned that I like CVS. So first let's kind of back out, and I'll reference the lower right-hand corner, which is what Harry was talking about earlier today. When we are day trading, we need momentum and we need sustained directional movement. And so this stock has a lot of promise, and I'll go through why I like it. But right here, as a day trader, it's going to be fairly difficult because at any time, you still don't know if the stock is going to continue higher or have the rug pulled out from underneath it. And you need a nice upward sloping trend line on a daily chart, stock that's making new highs possibly. That's the kind of breakout that's going to get momentum. But what we're talking about right now, and I'll go into a daily chart of the S&P 500, and here you can see that longer term, we've got this nice upward sloping market. So that is bullish. We had a little bit of a pullback from August to October. And earlier in the year, right in here, I felt that the market was starting to make some decent progress. We're getting through this Fed tightening cycle without the bottom falling out, without a credit crisis. And this is where I started thinking, yeah, we're probably going to be getting back into a swing trading environment, but we've got this August through October period that we need to get through. But once we get through this, I'm suspecting a big bounce. And then for quite a while, this is a monthly chart of the S&P 500, we can start entertaining some swing trading ideas. In addition to being a larger market, swing trading versus day trading, I'll also tell you that over 30 years of experience, I know that people like to swing trade from the long side. They are long only traders. Well, there's good reason for that. The market has a tendency to go up. Put up a 50-year chart and you'll see that. So I believe that we're getting into an environment now where we're going to be doing a lot more swing trading. So yes, in that context, right now with the market starting to move higher, we're seeing rotation out of, not rotation necessarily out of tech stocks, but more money is flowing into some of the laggards than there has been flowing into the tech stocks. And so stocks that are boring as all heck. I'm not talking about dogs. A dog is a company that's a startup. They have revenue problems. They got management problems. They have net income problems. I'm not talking about that. I'm talking about stodgy old companies that have not caught a bid recently. Those are really nice swing trading longs because they're going to start breaking out through some of these long-term downtrends and poking above these major moving averages. So yes, the swing trade that I like right now, and I feel you can go out perhaps even to the March expiration, is CVS. It's a boring old drugstore. And we're going into flu season, which should help, but it's getting through all these major moving averages. It's above the 200-day moving average, the 100-day moving average, 50-day moving average. You can go out to a March expiration and buy an in-the-money call option that has a delta that is probably in the 0.7 range. So the stock's at 73. You can consider buying a $70 call for $6. You're not going to be sweating this trade out. This is a stock that you're looking to start grind higher, maybe get into this mid $80, $90 range. It could take time to do that. So I'm going to be focusing a little bit more on the swing aspect of trading. Harry, on the other hand, is a very, very good short-term trader. And so I'll leave some of his trades for him to review some of the stocks that he likes. Before I go any further, though, I do want to highlight AAL because that is the stock that I gave you Sunday, and I like to include all of my previous picks in my videos. That's how I start every one of my videos off, is with a review of my previous pick. And there was the action Sunday night. You can see AMR is starting to gain some traction. This is another one of those laggards that typically goes through big sell-off and then a big rally. If we go through a daily chart, you can see big sell-off, bounce, sell-off, bounce, sell-off. Okay, multiple support here, just like I showed you in the video. It's starting to get some interest, and that's because asset managers are not wanting to chase stocks that are at an all-time high with the market doing this. They've kind of missed the boat and they don't feel like they're chasing if they rotate into some of those laggards. So food producers, another area I like. So I've kind of rambled on a little bit. So Harry, why don't you talk a little bit about your take right now on the market and what you like?
Yeah, I want to go back real quick. So a lot of traders, I know you like taking out of the money calls and out of the money puts. As Pete just mentioned, taking a 0.7 delta call. I like calls that are 0.8, 0.75 delta. You really need to think of it this way. Out of the money calls are very attractive to people. You buy your out of money calls on Tesla or Nvidia because you think, oh, I'm only paying $1 or $100 or whatever, and it could be 5 times, it can go 6 times, I can get a nice return on that. But really think conceptually about what it is, because you can get a nice return on a scratch off ticket, right? You can get a nice return on a lotto ticket too. You can get the fact that you can get a 10x or 20x potential return means nothing unless you know the percentage of time that you can actually cash in that return, right? So think of this when you think of an out of money call. Imagine I have a house for sale and it's for $1 million, just to make it a flat number. And you're interested in the house, but you're not sure you want to buy it. So I say, okay, tell you what, you give me $50,000 right now, and I will give you a contract that says you can buy this $1 million house for $1.2 million in 2 weeks. Would you do that? I mean, the house is worth $1 million right now, and you're paying me for the right to buy that $1 million house for more than it's currently worth, $1.2 million in 2 weeks' time. And if after 2 weeks' time it doesn't hit 1.2 million, but you lost your 50K, it's gone. Now, what you're betting on is that all of a sudden that the city's going to announce that they're opening up a football stadium 2 miles from that house, and then boom, the house is going to double in value. So now your $50,000 you spent to buy that house at 1.2 million in 2 weeks, that house is now worth $2 million. What is worth $2 million? You just made 800K. Well, that doesn't happen very often, does it? Right? Generally, you'd be better off just buying the house for $1 million. But you're literally paying for the privilege of buying something for more than it's currently worth when you're doing out of the money calls, and the opposite true with puts. They have their time in place for certain spreads that we do, called debit spreads, out of the money bullish put spreads, certainly, where it makes statistical sense to do that. But you can run the numbers time and time again. When I say run the numbers, you basically, you can write programs that could try out a trade 1 million times and see the result. You will make more money and do better buying less in the money calls than more out of the money calls. Buying 10 out of the money calls compared to buying 2 in the money calls, you're going to do better on the 2 in the money calls. It's been mathematically proven over and over again. The only thing that's stopping you is your psychology, is the psychology and mindset, the gambling mindset of low risk, high return. Well, if you're consistently doing a low risk play, add them all up, it's not so low risk anymore, right? It becomes much higher risk because you're losing $200, $300, $400, and if you journal your trades like you should be able to easily look at how much have you lost on out of the money options this past year compared to in the money options, and you'll see the clear stark difference between the two. So I just wanted to point that out. Right now, the market looks very it's a low probability trading environment with a bit of a negative tinge on tech at the moment. And I mean, if I had to choose, I'd say we're slightly bearish today, even though we're kind of long-term bullish at the moment. But whether or not this is sort of a resting place for the market or turn back down, I'm more in the line of this is a natural resting place for the market. But Pete, what do you think?
Well, to backtrack just a second, you made a great point about trading options and out of the money options. The first point to everything that we teach people is options are the last damn thing you should even be thinking about, whether you're swing trading or day trading. First, you need to get your win rate up. Okay. And until you're successful at gauging what the market is doing, until you're successful finding the best stocks and managing the positions properly, you should be trading small size and trading stocks. So any of the swing positions that you see me put on my YouTube channel, trade the underlying stock, get a feel for it, see how well it works. And as shorter term traders, and I'll tag that as having less than a 3-month time horizon, we're able to focus more on technical analysis. And technical analysis is just price action. That is what we are analyzing. And the premise behind it and the reason that it works is because that price action tells us what the institutions are doing. So we don't have to know what the revenues and the earnings are and the competition and the profit margins behind each company. That news comes out every quarter. So every 3 months, we get that snapshot when the earnings are released. If you are a longer term investor, say 3 months, 6 months and out, you absolutely should have an idea of how well the company is doing. So having a general idea what business the company is in and knowing that it's a consistently profitable company that has, boring products, okay, that is enough information for short-term trading. So as far as the overall market right now, and when you do get very precise and very, very short term, you have to be dead on right. So there's very little room for error. There's very little margin for error. On a longer term swing basis, you've got time. So you can let the stock move around. You can let the market move around. And a classic example would be this morning before the open. I had mentioned to everyone, listen, a gap up to a relative high is our worst short-term trading environment because we've got a chance for a gap reversal. I'm not afraid of the market pulling back on a gap down. I'm much more worried about a gap up that gets faded. So let's make sure that this gap holds before we start going in and buying. And of course, the market pulled back instantly. 2 red candles starts to fill in some of this gap. Ever since then, it's been drifting lower. So you have that resistance. Well, it takes a long time as a day trader to have the confidence to know what to look for and to be patient enough to wait for the right setups. The guy who thinks he's just going to come in willy-nilly and trade everything under the sun and, oh my God, look at these stocks. This one's gapping up and that one's gapping up. The market's going to break out to a new annual high. Just know it. I can feel it. They've got some serious egg on their face. And so as far as the overall market right now, I do agree that the market is digesting gains. I believe that we're compressing here. We're coiling. And I believe we're going to get a blow-off rally through the high of the year. It's what I'm looking for. Well, Pete told me that he thinks the market's going to break out. So I'm going to go buy some calls right now because if he thinks it's going to happen in 2 days, then I can buy him now. No, that's absolutely not what we do. We have some nice long-term bullish positions on right now. We've got some shorter term bullish positions on. The boat is not loaded up because we have light volume. I believe that asset managers are under allocated in here. We've had these gaps up and they've been waiting for a dip that's not come. And so what happens is over time, they get a little more aggressive because they need to perform. They need to keep up with the benchmarks and they need to keep up with the peers. That's their game. And if we get a breakout to a new high of the year, that's when I think you're going to start to see some volume pick up. We've got 2 big events coming up. We got the jobs report on Friday. That could be the catalyst to push us through. And so until that number tomorrow, Thursday, probably going to be a pretty dead day. We'll see how the jobs report comes out. I'm looking for a number somewhere in the 120 to 150K range. Hourly wages, 0.3% or less. Those are all decent numbers, very supportive of this market rally.
Well, everyone should
So,
probably set an alert on crowd for 245. If it breaks that alert, I think it's a good long. Even with tech doing what it's doing right now, I would.
You want to show your screen?
I don't even know how to do that, but
I got it on my screen. I'll
yeah,
zoom in
I
a
like
little
crowd
bit
right
here.
now.
So
I think it's breaking out.
that's gorgeous stuff. So here's what I like about crowd is see how it's been able to hold all these post-earning gains, and it's ticking higher. Buyers are more aggressive. If this were a head fake, it would have been blam, blam, blam. This entire gain would have been erased. So I'm sorry. Go ahead, Harry.
No, I was just saying that's one of the ones I like there. We have around 50 questions, by the way, here. Trying to pick some. I'll start on the bottom here. Do you hunt for picks the next day once the market closes? For example, setting alerts, industry stocks, relative strength, relative weakness, or only rely on the picks generated by various scanners, industry insights? I mean, for me, I have certain stocks that I'm watching, and I have alerts that I've set. So there could be alerts that I've set a long time ago, and they're just hitting now. Generally, every morning is a different morning, and I look and see what sectors. The first thing I look to see is what sectors are hot, what stocks are hot within those sectors, and then I look to see what obviously always what the market is doing, and whether or not I'm going to have a market tailwind. So here, a general rule is the less of a tailwind you have, the more prominent and stronger the relative strength and relative weakness really needs to be for you to take the trade. Because if the market is not helping push your stock up or push your stock down, and that is usually in addition to the relative weakness or relative strength that the stock has, then you have to rely solely on whether or not institutions are buying or selling that stock. And you can't rely on any market help. So right now, you're not going to get much market help except maybe on the downside with tech, right? You might get a little bit of a push there that's going to help on a short of tech right now. But other than that, you're not going to get much of a market tailwind either way because you have no market direction. So that also, feeds into what stocks are going to be looking at or not. And we all have the same grouping of stocks that we look at, Tesla, Nvidia, the stocks that have rather bigger moves, because as a day trader, you're trading volatility. And as a swing trader, you're trading trend and you're trading direction. And so you want stocks that the rugs aren't going to be pulled out from underneath you. You can look at a stock like Nvidia, for example. Nvidia has been bouncing around between 450 and 500. Now, for a swing trader, that's actually a really good pattern. You want to see a pattern like that. Why? Because you can sell puts against a pattern like that. You can, if you have the stock, you can sell calls against it. You can even run the wheel on a stock like Nvidia, as long as it stays within its range of 450 to 500. Now, once it breaks out of that range, then you have to reevaluate what you're going to do with a stock like that. But, that is as far as I'll go in terms of having stocks that I'll carry over day in, day out, other than the swing trades that I currently have. So it's one question there. Pete, if you have some.
Yes, you brought up a really good point also on CRWD that you are short-term trading it. And earlier we talked about momentum and what we like for short-term trades. So let's say that you are buying call debit spreads out of the money. Well, instead of that lower right corner that we had for swing trading, where you've got lots of time for this stodgy old company to recover and join the market rally, when you're shorter term trading, you need to have these types of breakouts right in here. That is what's going to continue to fuel the stock higher, because we need to be right now. And we need to see that sustained movement. So that's why we focus on stocks that have that type of momentum.
Cool. Let's see here. Another question. uh, can you please share latest stats on average holding time, walkaway analysis for last few trades? I'll run that and share it. Sure. I have to take a look. Let's see here. Due to the recent macro backdrop, many people say easiest trades are in bonds, currency, heating oil, commodities. Do you experience the feeling of being left out and compelled to take those trades by diverting your expertise of trading mainly stocks at relative strength and relative weakness? I don't like to divert my expertise. If I don't know anything about an area, I'm not going to go in the area, right? I know enough about bonds to know in general what their impact on the market is going to be, and to know if the bond market is up or down, how that might affect things. But I don't know enough about them to trade them. And as many of you, I'm sure, see, one of the systemic issues in trading is people assuming they have more knowledge than they do, never admitting when they don't have knowledge, and then spending their money on things that they don't know enough about. I mean, if you don't know how a spread works, for example, the other day we were talking about doing what Davis phrased as a WADAM. And, it's selling puts against a stock and then buying a put that's just one strike down, or sometimes two strikes down, a month or two out. And you do that with a very particular pattern, right? But unless you know how that trade works, unless you know what should trigger the trade, how to get out of the trade, how to work the trade, you shouldn't be doing it. I mean, do it, paper trade it, certainly, because that's a great way to get experience. But trading something you don't fully understand, or doing something you don't fully understand, is almost a guaranteed way of losing money. You wouldn't want to play poker for the first time and go to, the $500 buy-in table at a poker room and sit down with a bunch of pros. Because when you're trading against other traders, you're trading against institutional trades. And so if your level of information and knowledge is below theirs, you're not going to come out ahead. And that's why if you have a system and a system works, then you can, but you need to know it, and you need to know it, front and back. So I don't experience a feeling of being left out, by the way. Sorry to go roundabout in your question. And the reason I don't is because I know how much I'm going to make this month. I know how much I'm going to like. But this goes back to the earlier point, and it really is the core of treating this like a job. I know how much money I'm going to make this month. I know how much money I'm going to make next month, the month after that, month after that. I know pretty much how much money I'm going to make this year, and then I know if I'm going to be increasing my base amount and how much I'm going to make next year. There's going to be very little variation there. Very little. There might be one or two trades that I do really, really well on, but there'll be an equal chance of trades that I do really, really badly on, and they're going to cancel each other out. And overall, I'm going to wind up at a set number. So no, I don't feel like I am missing out on anything, because it's not going to impact what I'm going to be making as my salary. And that's all that matters to me, which is how much am I making? How much am I using to support my family, pay the bills? All of that is not going to impact that. So no, I don't get FOMO, because I know how much I'm going to make this month, whether I miss this trade or that opportunity or not. I know exactly what I'm going to be making, and the FOMO or not, it doesn't impact that.
Well, my 2 cents worth are, I never feel like I'm missing out. For 30 years, I haven't felt like I missed out. I have a trading system. The system works. I talk about the intricacies of the system, why it works, how we work it. If somebody has a system of how to trade heating oil, then good for them. I hope they share that system with you, and I hope they share their performance on that system with you. Heating oil has a seasonality pattern. I don't know what all the seasonalities are to it. I don't care what they are. I trade stocks with relative strength, and I explain why my systematic approach works. I look at all the people in the chat room. I see a lot of fantastic trades posted. How could I possibly feel left out? No, I don't have any FOMO at all.
Another great question here is it's from the chat room here. What an ever evolving group of new investors, new traders that have not experienced different market conditions, seasonal markets. What are the best ways to help newer traders while making sure seasoned traders continue to advance? How has the chat room evolved? How has teaching evolved, and so on? It really is a good point, because in a sense, when you're teaching trading, it's almost like you're teaching school, and you're teaching 9th, 10th, 11th, 12th grade all in the same classroom, right? So you're teaching people who are just starting, in which case more experienced traders are going to hear the same lessons over and over again and hear the same questions over and over again. And you also don't want to err on the side of going over the head of people. And one thing I found and learned a very clear lesson on is, if you give advanced methods to people, they're going to use them, and they're not going to use them well. They're not going to use them properly, and they're going to wind up losing because of it, on top of the million questions you're going to get that'll drive you crazy. I still have not cracked the nut of trying to figure out, okay, I have trades that I don't ever post, for example. And I have methods that I use that are, one would consider advanced methods, right? Whether they're certain straddles that I'll do, or they're certain butterflies that I'm doing, whatever it is. How to teach those to a group of people who have mastered the foundation that's being taught, and give them the benefit of here are now new things you can learn, without contaminating the group of people that are still learning. Because no matter how much you caveat it, no matter how much you say, don't do this at home, saying don't do this at home is a guaranteed way of getting people to do this at home, right? So I have not figured that out yet. I want to. I want to figure that out. I want to be able to say, hey, here's the new advanced wiki. Here's the new advanced way to trade. Here's this. For those who have mastered what we already teach. But I don't know yet. I don't know the answer. So thanks, Dash Dev, for the question, but I wish I had a better answer for you. I don't know the answer to that. I wish I did.
Yeah, my take on that is that there is one very basic solution for those who are just getting started. It is read the damn wiki.
Yeah, that would be nice.
And for people that are in the chat room, I try to touch base with all the trial takers. My very first question is, have you read the system? It's going to take you at least a week to read through it. But it's free, and it's included in the free trial. And I don't offer it to the public. It's something that I offer to members. That's the best way that you can spend the week. I don't charge anything for it. And that information is going to cut years off of your learning curve. It will. Once you start seeing all the pieces are face up, once you see what they are, then over time you can learn how to put them together. So if we sense in the chat room that the questions are so basic that any easy search is going to yield the answer, folks, we get irate with you. I mean, I'm just going to be flat out honest with you, because there's such basic questions that you can get the answer to yourself. And when you're a trader, you have to put the work in. You have to dig for the answers. Nobody's here to pat you on the back and spoon feed you, because quite honestly, we don't care. I mean, everybody has got to take responsibility to learn, and it's difficult and it's time consuming. And so the really basic stuff, yeah, we are going to kindly sometimes point you in the right direction, but we expect you to do your dang homework. And then building on top of that, after hours, I don't know of another community that spends more time answering those questions. We don't want the chat room clogged up with basic questions during market hours. That's why we don't let trial takers post questions during market hours. After hours, post them. We'll get to as many of them as we possibly can. Please search for the answers. Help yourself, help us.
I'm going to throw another trade out there for everyone that I like right now. Where is it here? I'm putting another alert on this here on UPS. I
will bring the chart up.
I like the strength today of UPS. I like how it stayed above the SMA 50. It is not extended from its EMA on the daily chart. I would put an alert after the high of Monday, which is 156.23, but it's pretty much right there. It's on it right now. So yeah, I like UPS right now. I think there's enough room before you get to the SMA 100 at 160.40 to make it an appealing trade to keep an eye on.
Cool. So I just, while you are mentioning charts, I am bringing them up. I have a GTC alert set where you had mentioned it. You can see how the stock is continuing to make higher lows. It's through all those major moving averages. On the 5-minute chart, you can see how it was compressing all day, breaking out to a new high of the day. What has the market done? 5-minute chart of the S&P 500, down, down, down. What is UPS doing? Compressing, breakout when the market is still waffling around the low of the day. Nice pick. Love it.
There you go. So I'm just going to occasionally throw a pick out there and see where it goes. See, we have lots more questions here. Definitely not going to get to all of them, but let's see. Okay. Can you share your insights into sector rotation to identify when a sector rotation is occurring? How does this impact your trading decisions? Well, like I said, the first thing I do is I look at, every day, after the first 15, 20 minutes, you got to wait for the market to settle. You should always wait for the market to settle. Rarely will it become apparent which sector is hot right away. But I like to look to see which sectors. Now, there's a couple of things. One, days like today, the only sector that's really popping on the downside is energy, is down by more than 1%. Everything else is kind of within the realm. Tech is trending. You can see certain tech stocks are trending down, but in general, the market is going to be driven by a few sectors, right? Nobody gives a shit about utilities, for example. Nobody cares, whatever. Every now and then you'll be like, oh, utilities are popping. Who gives a fuck? Whatever. If you can find a stock in utilities, great, go for it. But in general, you have tech, you have energy, right? Those are your big sectors right there. And when they're both up at the same time, then you have a really strong bullish trend. Usually they're in opposition to each other, right? Usually when tech is up, energy is down. When energy up, tech is down. So those are your two big ones. Then you have your sort of intermediate, occasionally hot, occasionally not, like finance, right? Every now and then you hit a streak because the Fed announced something, or there's a new regulation that's coming out on the banks where finance or credit cards, where finance will become a hot or cold sector. That is generally news driven. And you'll see the different news events that cause the finance sector. Way back a few months ago, maybe half a year ago, regional banks were a big issue, right? And that was driving the finance sector, where there was fear that there would be this run on regional banks. So you have the finance sector, and the other sector, obviously, that can be very driving is the healthcare sector, which is very mercurial, where that sector, you have some major big, the Pfizer's and the ABBV stocks, but a lot of that can be driven by a huge drug that now the FDA has just approved, and that can drive that whole sector. And then, of course, you have your consumer cyclical sectors, your consumer defensive sectors, and you're looking at consumer behavior, shopping behavior, looking at the Amazons of the world and Costco of the world and Walmart. Those can also be drivers. Like a lot of the price action you saw today on the market in general, believe it or not, was driven by comments from Walmart. Walmart was talking about the consumer going into next year. And when Walmart talks about the consumer, the market listens. Why? Because 70% of the frigging country shops at Walmart. Why? I have no idea, but they do. And they look, what they're thinking is going to be pretty representative of the buying power and consumers in the country. So, and that by and large will also extend globally. So that actually was a market moving event today. It stopped the market certainly from going higher. Those comments, you could see when those comments were made, and then you could look at SPY and you could see the drop, right? You could see right at 11:20 a.m. today, which would have been 8:20 Pacific time. Those comments came out, and you can look at the red bars right on SPY right there. So I look at sectors a lot. And I also pay attention to stocks that are relatively strong to the market, but I like to see stocks that are relatively strong to their sector as well, or relatively weak. Whenever I make comment relative strength, it's also relative weakness. And the reason for that is that it also ensures me that the stock is not just getting boosted up or dragged down because the whole sector is going in that direction. I like stocks, and this is, again, if I can just drill one point home over and over, stocks that are driven by their own engine. Those are the stocks you want to trade, not the ones that are flowing down the stream in the current of the market. Those, fine, because then you are subject to the whims of the market, where anytime Powell can come out and say something, whatever, the market can shift direction. But if you have a stock that is under its own power, that is being driven by institutional buying and selling because there's something about that stock that day, or if you're looking at the daily chart over time, the upward trend, that is what you want. A lot of times, for example, positive earnings on a stock, you won't see it until over time, because what institutions will do is they'll buy over time. The reason I'm still holding Uber, for example, Uber just got, it's one of the trades I have. It's a long trade. I'm long Uber right now, December 15th, deep in the money calls. They're in profit by about $2 a contract right now. I have 250 contracts. And the reason why I did not cash in on Uber is because once you're accepted the S&P 500, a tremendous amount of buying has to happen into the ETF, into that stock to go into the ETF. And that is spread out. Now, a lot of buying of stock happened running up to it, or that expectation, but there's still hundreds of millions of shares that still are in the process of being purchased on Uber. And you see Uber today, by the way. Look at the stock today. And Pete, if you want to put Uber up, you can see the move today on Uber. After a resting point yesterday, which was just people taking profit. Those are people like, oh, I'm going in because it's going to get in the S&P. Boom, I got my profit, I'm out. I'm waiting for the bigger profit. I want to see Uber hit 65 before I cash in those calls. Long-winded answer, sorry. Go ahead. Take it away.
Yes, as far as I'm concerned on sector strength, I'm aware of it. I look at it. I've been in such short-term trading mode for the last 2 years. I don't even think past a week or 2 weeks. Now I'm starting to get into the mode to where I am thinking about it. And there, I think that for longer-term swing trades, that sector rotation is even more important to be aware of. But when I look at short-term day trades, I just look through a bunch of scans. And when I look at common themes within the list of stocks that's coming up, then I know pretty much where the strength is right out of the gate. And this is a list of the sector ETFs. This is an Option Stalker Pro. So you can see how each of them are performing for the day. And so if I went into, let's say, Green Royal Flush, and I started to see a lot of stocks within a certain group or sector, then I know that that particular sector is hot. If I look down the list, and I did just have Walmart up, let's take a look at Uber right now first, because that was the last stock that Harry had mentioned. You can see how Uber is continuing to creep higher with the market still near its lows. And here's the chart that he was specifically talking about. There's the EMA 8. There's your news that Uber is going to be added to the S&P 500. Pulls back, checks that breakout, and today, in a down market, Uber is showing strength. So this is exactly the type of setup that we would like to see. Gee, Harry, do you think there are any institutions that are buying Uber today?
All of them.
Right. So that's the tell of what we do. The market's down. The stock should be down, but the stock is up. That tells us that the institutions are out there buying it. Now, of course, they have to buy it right now because it's in the index. So they've got to add that exposure. The index funds have to be adding that stock. With regards to Walmart, the retail sector, and this is one thing that I'd like to kind of focus on. You had touched upon how important it is to look at a stock and a particular company as an entity, okay? What's important about that is that each sector and each group, the companies are loosely aggregated within these groups and sectors, but they could be vastly different, vastly different. Okay, if you're talking about like an energy producer group, okay, they're going to be pretty closely correlated in terms of what they do, and their profit margins are very closely tied to the price of oil. But let's look at retail. Well, here are two stocks in the retail sector. One of them is Walmart, and Harry had just talked about Walmart. Look at that big earnings drop and see how the stock is continuing to drift lower. Well, here's another retail stock, Home Depot. And those of you who followed the trade that I posted on Twitter last week, we were selling an out of the money bullish put spread, selling the December 15, 305, 302.50 bullish put spread for 50 cents. It's going to yield a 25% profit based on the margin that you have to put up. Nice trade. Wanted to go fairly conservative. Stock was drifting higher. This red line, by the way, is the AVWAP-E. And you can see how the stock has just exploded higher. Quite a different chart from the Walmart chart that we both just looked at, but both of them are in the same sector. So sector rotation alone is not enough. You have to look at what the individual technicals are for each company, and they could be vastly different.
We got another trade possibility for everyone here. AJ Robb, I think in the room, also pointed this out too. But I really like the setup on shorting SMCI, if you want to bring to that one, for two reasons. One, several reasons actually. It's very weak today, number one, SMCI. Two, you'll notice it falls below the SMA 100 and SMA 50 on November 30th. It is unable to reclaim the SMA 50 on Friday the 1st, on Monday the 4th, Tuesday the 5th, or today. So now you have a stock that is weak. It fell below all of its SMAs. It was unable to recapture its moving average. But now, if you look at, and I know I'm going to say the ugly word trend lines here, but if you look at the low plus trend line here, so if you draw it from the bottom of Friday 11.3, connect it to the bottom of 11.6, connect it again to the bottom of 11.7, it continues on, it connects to the bottom of 12.1, then 12.4, there's an attempted break of that support, doesn't break, holds. The next day, 12.5, another attempted break. You see that line goes right below that line, the trend line, but nope, closes above it. Today, whoosh, straight through that support, right down below, and it's continuing to drop. It's consolidating right now. To me, not even coming back up for a test of VWAP today. This stock is weak. I would short the hell out of SMCI. Back to you, Pete.
Yep, and here you can see the weakness today. The stock is continuing to drift lower. It's close to its low of the day. I do have the 10TL trend lines up, and those also do come into play right in here. So you can see connecting that point to that low. And that's also a breach. There's your AVWAP-E. That is another resistance level now. Was support, now resistance. Those of you who aren't familiar with AVWAP-E, again, it's in the system. It's one of the things that I describe what it is and why I believe AVWAP-E is relevant, why we anchor it there. So when you take the free trial, you can go in and read about it. But I'm using it more and more in my analysis. I really like it. So yeah, that looks like a decent pick on the short side. And you can see series of lower highs right now when the market has been strong. Yes, nice relative weakness there.
Yep. Okay. So let's see here. Next question here. Let me get another question going. We got a lot of these questions from Log on Twitter, X, whatever. Let's see. Is too much relative strength, relative weakness obvious to everyone, and it's not a good idea to take the trade? For example, going long on an overextended stock where risk reward is not in favor of continuation and reversals are brutal. Well, this actually gets to the core of a fear a lot of people have, which is by the time you're ready to take the trade, and by the time you notice it, the move has already pretty much happened. And now what you're doing is you're taking the trade, and this has happened to everyone, I'm sure, right? Where you take the trade and then bam, right when you take the trade, it reverses. And you start thinking, if I just do the opposite of whatever the hell I'm trading, I do well. Well, you wouldn't, number one, trust me. But what's happening is yes, you are catching some of these things a little later than you should. So in which case you might want to think about how can I catch them earlier? But two, not every, a stock will never just travel in a straight line going up, 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 up. There's going to be pauses. There are going to be reverses. That's why the daily chart is so important. That's why, if I go into a stock and I go long and then, oh shit, it just dropped $2 or whatever, it doesn't bother me that much as long as I'm looking at a trend on the daily chart. By the way, look at Uber just popping like crazy right now. That's exactly what you want. So yeah, there's no such thing as it's too obvious where everyone's going to be. That's what you want. You want everyone in there buying. You want institutions in there buying. When it's very obvious, it means that institutions are buying the stock proportionally more than everything else in the market. But it's really a matter of your tolerance level. If you are looking at something, particularly if you're thinking of swing trading, right? And in swing trading, what really matters is the daily chart. That's what you're focused on. You don't care that much about intraday movements. It's just that's noise, right? Oh, because up $1, that doesn't matter. Where did it end the day on the daily chart? That's what matters. Did the trend you noticed continued? And was the support levels broken? Now, sometimes when you're looking at a daily chart, you go, okay, I'm going to buy, the stock's at $100 and support's at 95, but that's $5. That's a huge drop. Well, you need to size your trade accordingly. If you can't handle holding onto it, because it's very well possible that stock may drop to $5. It may test that support and then it may bounce all the way back up. It doesn't mean it's not a still bullish stock. It just means that they're testing the support to be confident enough to buy more of that stock. You don't want to buy the stock unless you're sure that support's going to hold, right? But if you can't handle that drop, then don't size for it or don't take the trade, because or do it as a spread. And that's where spreads really come in to help you, where they help you weather those type of drops and let you hold on to the position and see if it bounces back up. But on the same token, if your position breaks that support level, you have to be willing to close the trade and take the loss. You have to be. The corresponding loss, if you don't, will be much, much worse.
Yeah, the time that I see that question come up more often is short-term trading. So if you're looking at a D1 chart of SQ, let's say, and you look at that type of strength, look at the relative strength on the daily chart. That is just continuing to power higher. I'm not afraid of that at all. Yeah, okay, you move a little bit away from the EMA here, but you catch up to it right in here. Okay, well, this is the next leg higher. You're catching up in here. Okay, there's your next leg higher. I would have no issue being long a stock like this and adding on the way up, as long as it's holding that support level and preserving its relative strength. So what about today? Pete, oh my God, look at SQ go. I gotta have me some of that, but I'm afraid. Okay, that's perfectly legitimate. There's a huge gap up. I wouldn't chase that, especially today when we had that early market pullback. So this is when you go in and you right click and you set your alert. Create alert, go in, go down to real relative strength, right in here, set it for M5, strong versus SP5, SPY, M5. You save the alert and it's going to know, well, right now it's bullish, so it's got to go bearish and then it has to go bullish again. Then I'm going to get an alert, just like it did here. So it sank with the market. It went bearish temporarily here. So now you're going to get your alert right in here. You can take a look at the stock and you can see, well, gee, how do I feel about the stock right now? It was relatively weak. It's regained its strength a little bit in here intraday. So for a day trade, I'm thinking, I'm not seeing a couple red bars in here. It's testing the VWAP. It's just sitting on it. What's the market doing? The market's continuing to drift down. Nah, I don't think so. I don't think I need to buy that stock right here. It's not really doing what I expected. So no, you don't have to chase this. You set your alert and you wait for it to come in. And so on a D1 chart, right up in here, now that it's made this next leg higher, Pete, would you buy it here? It's strong, right? It's strong relative to the market. I wouldn't chase it up here. Why? Because look how far it is from that EMA 8. You don't want to buy into these big gaps. You want this little compression. If you miss this, okay, you can day trade it. So you don't have to feel like you missed the entire train. You can day trade all over the place in here. And trust me, we have in the chat room. I know we've been trading it. Swing trading, wait for that compression. Once that EMA catches up to it, okay, now you can start getting into a partial swing position. So just let these EMAs catch up. Try not to chase.
Someone asked me, can you go over Chewy, please? Looking at Chewy right now, I don't like Chewy as a trade right now at all. It's just bouncing around the 50 SMA. It's not confirming above. I mean, several times it looks like it goes above it and then below it. I mean, it's slightly bullish today, but I would not call that any confirmation whatsoever that this stock. I know what you're thinking. You're thinking this is a beaten up stock that used to be worth $122. It's $19 now. Hey, maybe I could buy 1,000 shares of this stock, and in a year, maybe. Don't think like that. This stock is beaten to hell for a reason. It doesn't mean it's going to reclaim its old glory. Wait until it is absolutely confirmed over the 50 SMA into, you really want to see the stock over 2150 before you even consider going bullish on it. And then you have to deal with the SMA 100, SMA 200. I mean, honestly, I wouldn't trade this stock until it was over 30. That's just my.
Here's my 2 cents worth on it is, they announce earnings after the close. If Harry tells me that he likes it, I'm going to buy it before the close. Ding, 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 ding. I'm going to make a bunch of money. So yes, it does have earnings after the close.
Yeah.
It has been badly beaten down. Do you think that the institutions might be in here selling the living bejesus out of this stock? Do you think there might be a little problem with their earnings? Yeah, I would think so. So on a stock like this, you don't go picking bottoms. You wait for that support. But Pete, you just told me that American Airlines was a good buy and ConAgra, and those are food producing companies. That's an airline. They've been in business for a long time. Chewy's a retailer. I don't know if they're going to turn the boat around. I don't even know what the issues are with the company in here. But trust me, when you see a pattern like that, they have issues. So if you get a nice earnings report that comes out, the stock looks really good, it's starting to rally. Well, how about if it gets above this 2250 level, Pete? Would you buy it then? I need to make sure that this is not a short covering rally. And there are going to be a lot of shorts in here. So yeah, you're probably going to see some type of reaction in here probably would favor, surprise would favor the upside, but you can get this nice long green opening, this big gap higher that turns into a bearish hammer because sellers, these guys who still have some stock to unload, will drive it right back down. So let it form a base. Maybe they are turning that battleship around. Maybe the earnings are going to be a little bit better than expected. Fido is going to get some new treats for Christmas this year. I don't know. Don't need to trade the number. I will wait for the reaction and I'll watch the price action, and then I'll know how to approach the trade. So A means earnings after the close today. So hopefully we're done with this live event by then. We'll be watching it after the close.
Weird. Someone asked if what is that? Where'd it go? Jesus. Oh no, I said ASML, if it's still a good trade. I still like ASML. It's just taking a beating from the pull down on all of the chip stocks today are getting hit with it. But I like the daily chart on ASML. ASML is actually a decent stock to think about doing a out of the money bullish put spread on. And if I were to do an out of the money bullish put spread on ASML, I probably would try to get something around 650 area. But you might have to go out a month for that to get the credit you need. So I'm not sure.
Yep, I like that. I might even do a bullish put spread in here because if the stock starts to crack down and it takes out the support, you can leg out of your bullish put spread, buy the short side back in on the notion that that gap is going to fill and that it's going to find support at the 200-day.
Someone asked if they could take the one option courses that you mentioned and then do the trial membership, or the course is part of the trial membership. They're part of the trial membership. The trial is free though. So there we are. Okay. Let's see what else is going on here.
Which I should mention, Harry does not work for one option. Dave W. does not work for one option. So when you ask them questions in the chat room, they're not obligated to answer any of your questions, nor are any of us. They do it out of their own good graces. So, and thank you to all the members who pitch in to answer those questions. I really appreciate it. And that was kind of the spirit of the entire chat room, was to help each other out. Now we have got so many dang good traders in there right now. It's fun to watch all the trade ideas that are coming up because they're the same trade ideas that I would have.
There's a huge, I mean, the bearish movement I'm seeing right now on chips is pretty strong. I mean, D-Dog, everything is just, tech is dropping quite a bit right now. And I don't know what's behind it or why. I know AMD had an event today, which might be part of that, but something is driving this there, and it's driving down the market clearly. But Oracle, D-Dog, all of these stocks are on a huge downtrend right now.
I'm just going into some of our searches, and they should be coming up in there. And taking a look to see. I'll put up Oracle. Yeah, you can see that SMH, the semiconductor index, was down. I just had that up a second ago. And there you can see the gap up this morning, gapped up with the market, and it's been selling off the entire day right in here. So long red, possibly even engulfing candle with a little bit of time left. Let's take a look at the 5-minute chart. That is the nice, steady type of price action that I love to trade. You can see how these bounces are fairly shallow, series of lower highs all the way down, all the way down, all the way down. Nice momentum. So yeah, Oracle, I just had that stock up, and that one is doing the same thing. And you can see on the daily chart, that's a nice little rollover right in there. And right now the stock is taking out the 100-day moving average. So you can see that big breakdown right in here. It's got room to go too.
Netflix also is taking a bit of a beating here. Netflix is this is a good time, by the way, when you see this, to look at the stocks that are holding up, right? You want that's relative strength, obviously. So you want to take a look and see what stocks are doing well. I imagine a lot of the finance stocks like PayPal or a firm are probably doing okay. PayPal's running up against resistance right now, so you wouldn't want to play with that one. But and also, well, let's see, Boeing.
So for the just a little background for those of you who are not familiar with my screen setup, in the background I've got the SPY. This is a 5-minute chart, and so you'll be able to see it in the right margin here, and you'll be able to see what the market's doing in the last hour of trading as we continue this. I'm going to take the SMAs off so you can follow what the market's doing, and then you'll be able to see what the stocks are doing. And this is Netflix right here. This is the daily chart. This is a long bearish engulfing candle. And yeah, it's cresting. You can see how it hit resistance at that prior high. And now it's been moving lower while the market has been stable, treading water near its high. Red key bars on the way down. Yeah, that's some pretty heavy selling pressure in your M5 chart. Nice big drop earlier today, and now the stock is on its low of the day.
I'm looking for a short here. Looking for a good short. I like SMCI. I'm looking for JP Morgan.
Looking for a day trade or a swing trade?
I'm looking for a swing.
A swing. All right.
I mean, Jamie Dimon just beat the hell out of Bitcoin about crypto stocks today, and you can see how that's responding. Coin, after a huge run up, became a little bit extended, and then those comments came along and smacked it down.
Do you think there's a little conflict of interest there?
A little bit.
With banks talking about crypto and how it's going to fail and it's no good.
I mean, he basically said that the only reason you need crypto is if you're a criminal. I mean, hell, Charlie Munger's last words were basically bashing crypto. You know, you find a lot of these old school money guys, they do not like crypto at all. And look, hard to blame them on that, but I mean, in a sense, it's made up currency. I mean, all currency is made up currency, obviously, but still. It's,
Are you short energy at all?
I do. Yeah, I like the Oxy short. I think that Dave pointed out a while back, and ran with that. And Oxy's still a good short, actually.
XLM's breaking down nicely. SLB, really nice little rollover here. SLB looks like a good short to me.
Yeah.
But I'll look outside of energy since you've already got energy on.
I don't know. I kind of take a perverse pleasure in shorting Netflix here, maybe. I might go with the December. I'm looking at the December 15th, 460 puts over $14.50. Yeah.
Okay,
maybe.
Netflix. I'll put up Netflix here so you can take a look. And I'll put up the option chain. And I'm sorry, which expiration were you looking at?
I'm looking at December 15th.
December 15th, okay.
And I'm looking at the Delta 0.75, this 460 puts.
Yeah, 1480 ask, 1435 by 1480.
Yeah. I'm looking at that. I might drive 100 of those here. In fact, I think I will. I want to have another short on, and Netflix just seems like a good one to have. So I'm going to put it in for 1460. See if I get it for. Well, I'm going to see if I get it for 1450, and route it through 100 and let's see. Well, now that I just became the bid at 1450 on that stock. There we go. Got it. Okay, filled at 1450. So I just short Netflix using, and when I say short Netflix, I use the word using the 460 puts. Otherwise, you think I'm shorting the puts, rightfully so. So how am I shorting Netflix? I'm shorting it using going long on the puts. But if you say long puts, then everyone gets confused. So shorting Netflix using the 460 puts for $14.50, the 12/15 expiration, and I did 100 contracts and sending that out to the world. There you go, world, or whomever cares enough to know, shorting Netflix there. And as always with all of my trades, you can confirm them obviously just by looking at the time and sales. My trade size is big enough that it shows you can easily spot 100 contracts of those puts being bought. So there you go, Netflix short. And look at that, I'm already up almost 50 cents on that trade.
And you can see the S&P has just made a new low for the day. Let's go into the 15-minute. And you can see there's a support level right here around the 454 level, roughly. But I mean, the market really has just been chopping around. If we go into a 30-minute chart, you can see it's just been biding its time as far as I'm concerned. So it's going to take a catalyst to force this breakout right in here.
Yes.
And we've got the potential for one. Well, the jobs report could come out and generate a miserable reaction. That's why earlier I said, I believe we're going to see a breakout to the upside, but I'm not loading up on calls. I'm being very prudent. I've got some long swing positions on. There's no real reason to be aggressive here because we don't have the volume. We get the breakout and follow through ahead of the FOMC. Okay, yeah, that definitely gets me more bullish, but we haven't seen that yet.
And by the way, for those who, Moderna is such a tease, up $5 today, now only up $2.80. Moderna's having a rather large event tomorrow, so expect volatility. So if you're in a Moderna trade and you went long today because it was up $5 earlier, know they have a large event tomorrow, and that event will offer some volatility. I am continuing to await. Now, this is not a wiki trade. It's not a system trade. This is it's almost a 0-1 type trade. Moderna has been working with Merck on a cancer vaccine. And once that is released, and if the trials are as good as I hear they're going, and I hear they are going quite good, given the number of shares I should have a friggin' board seat on the company. That stock, to me, is going to go to 150. You announced you have a cancer vaccine. The market's going to take note. On the other side, I think it has found the floor at around 70, and you see it's now moved up to 80. And if you look at all the analysts, they maintain their price points over 100, most of them on it. So that's why I'm still in Moderna, because I know a lot of you asked that question. But it is a rather large position, obviously. Now, my Netflix position is now up 70 cents on 100 contracts. So there you go. That's working well. And even though the market is right now kind of dripping lower, you could see Netflix, some nice long red bars. A lot of relative weakness there.
So I'm going to mention something regarding rotation. And you can see this is IWM. This is the Russell 2000. If you look at the major indices, that's a good way to measure sector rotation. So if you're comparing QQQ to the S&P 500, you're comparing the Dow Jones Industrials, you're comparing Russell 2000, you can get a feel for where the inflows are. And just recently, we've had this nice move higher in the Russell 2000. In my opinion, that is risk on. So we're starting to see the big mega cap tech names have actually become a flight to safety because they're so big and they're behemoths and their revenue models are pretty consistent. Their earnings growth is very consistent. So that's where a lot of money has been parked, and that's where a lot of the money earlier this year went into those stocks. Well, if the Fed is closer to the end of their tightening cycle and they pause in December and January, as is priced in to the Fed fund futures rates, well, that is kind of a risk on scenario because the market, the bottom has not fallen out of the economy right now. So that's why another stock that I like, I highlighted it in the chat room yesterday, and no, it was not because I thought that it was going to fly higher today, but it did. I like ConAgra. This company is a food producer. It doesn't get any more boring than that. And so it's been a big laggard. And you can see how far that stock has fallen. If you go back long term, you can see it has a tendency to sell off and rally and sell off and rally. Well, this is a pretty deep trough that takes us all the way back to the COVID low. Would I mind owning a food producer at this price level? And if the market is going to break out, do I feel that there's more upside potential than downside potential? Yeah, I do. I'm willing to do that type of a swing trade. And you can see how the stock has been able to get through these minor resistance levels in here. And now it's challenging this resistance level that goes back actually quite far, and it's above the 200-day moving average. So ConAgra, I like it. Look at that price action. Look at the stock hold when the market is doing that. Could it be a flight to safety now? And I don't think so. I mean, this is just one day, too, of negative price action right here. And like I tell all of you, time and time again, our greatest threat for a pullback is not when the market gaps down. For day trading, that is our best setup because it gives us time to find the best stocks, the ones with the relative strength, and it gives us a chance to enter well and to join that longer term market tailwind, that long-term market move higher. Where do we get into trouble? When we have a gap higher. Why do we get into trouble? Because that's where the sellers are most aggressive. And once they get this momentum built to fill in that gap, and when you have two long red candles right out of the gate, that is pretty daunting. That tells you that it's not going to be a gap and go for sure. And now that momentum starts to build. And when the market can't rally off of these lows, the programs start to kick in near the end of the day. Buyers become very passive because they look at this and they go, well, I'm not sticking my head in that news. There's no reason.
What's happening with
me
SPY
to.
right now there, Pete?
I'm sorry?
Take a look at SPY right now.
Yeah, making a new low of the day right here. That's the main chart that I have on right now. So you can see that these little bounces here, lower highs, okay? Tried to rally, couldn't rally. Tried to rally, couldn't rally. So this is a kind of a buyer's boycott is what I deem it when you've got the volume, although the volume has been pretty average. So that's not bad.
Yeah.
It's not like the volume has been horrible today.
This is a tech sell-off at the moment. I'm still not sure where it's coming from exactly, but there is definitely a tech sell-off coming. If you look at NVIDIA, look at Microsoft, even Apple, there's a definite weakness here on the chip side, certainly. So
my pre-open market comments this morning, I referenced 1129. This is the 1129 chart. This is the 5-minute chart. You see the similarities, how you got the gap up. This is our last big bearish trend day. Can't get any lift off of the market, and into the close, you start to see the selling pressure accelerate. And there too, we had decent amount of volume. And I believe that day, as I recall, Google and Microsoft, Meta, they were quite weak. Actually, I should just put an overlay and we can confirm that. So I'm going to just add the QQQ overlay to that particular day. And I think we're going to see that it was tech that was providing a pretty stiff tailwind then as well. And so here's that day. And QQQ, I mean, it's relatively weak, but I can't say that it was as weak as the S&P 500. So,
Right.
And I'll put that QQQ chart up actually instead of the S&P 500, and we'll be able to take a look at that. And yes, you can see how that's making a new low. The daily chart, you can see how it has backed off. We do have a lower high on QQQ right now. And this I would view as a fairly significant support level around 384, because there's a gap right there that needs to be filled, and it has touched that support level a few times. We're getting pretty close to it. You can see how that support also comes back in here. So yeah, it's pretty significant.
How we close here. I'm really curious as to what is holding its strength right now. And I mean, if I didn't hate it so much, I hate this fucking stock. All right, well, we're putting an alert on ABBV once it gets through and confirms over the it's SMA 200, but that's been strong all day, not letting up at all. What else is looking decent here? And well, there goes Uber. Uber is still strong. So I swear to God, if Moderna falls below 80, I'm gonna fucking break something here. Tesla weak moment. Tesla, where are we? Yeah. Tesla fall, not eight. Now, it's interesting on Tesla because Tesla has been trying really hard to break above the SMA 100. And you can look back on 1129, and on 1129, you see it breaks above that, right? And this is why confirmation is so important, particularly when we're talking about swing trading. So if you were on November 29th and you're like, okay, I want to swing trade and I really like Tesla, because there are some people out there, there's Tesla fanatics, right? And, oh, look, it just broke above the SMA. It looks good. Great. I'm going to go for it. Look what happens the next day, and now it is unable to get back above the SMA 100. You, particularly when swing trading, you want that confirmation. You want to see, okay, it is now above that average. Are they going to hold that level? Are they going to test it? And is it going to hold? Because if it does, if Tesla had tested that SMA the next day, it would have given investors confidence that this stock is found a floor here. It's not going to break below it. And they would have started adding to their position. But it just opened below. I mean, it literally gapped down below the SMA. It didn't even test it. It just went right through it. And then it continued down. And now it's stuck between the SMA 50 and the SMA 100. I would not touch Tesla until it decides on a direction, which way it's going, the above or below the SMA.
Yep, and that's so as Harry is describing a particular setup, you'll see me going in and taking a look at that stock. And so that's what I did, was I went back to Tesla on the 29th, showed that gap reversal, the gap up through that moving average, and then the entire day the stock sold off and it finished below that major moving average. So yes, if you're swing trading, then you need to make sure that you have that technical confirmation that the stock closes, not only closes above that SMA, If it opened above that SMA and it's the real deal, you want to see it closing on its high of the day with strong volume. The buyers are relentless. That's what you're looking for. The price action instead on that particular day told you that sellers were more aggressive, and that little pop up above that major moving average was a selling opportunity for them. They smacked the living heck out of it.
Really like the strength on ABBV. If it wasn't for that SMA right there, I would be long, particularly with the market doing what it's doing, and this stock is just continuing to march up. Delta Airlines. I mean, the problem is right now, just about everything is retraced from its high of the day. So you're going to see stocks with a lot of wicks on them. And so when you're looking at these stocks as to whether or not to go long, and you see that they're not, as Pete just said, closing at the high of the day. These stocks are not closing at their high of the day today because look what the market just did. The market just dropped like $1 in the last 15 minutes. And that's going to cause a lot of retracement. But if you look at a stock like Uber, again, yeah, it pulled back, but now look, the market is not going anywhere. And now look at Uber taking this resting point and just jumping off of it. It's just heading right back up towards 60 again. So right now, I think my long pick, and I'm already long the stock, is Uber.
I like it.
That's definitely my long pick there. Is that true historically? When the Fed starts to cut interest rates, the market does very poorly. In this case, then should we be concerned about the market going lower if and when it starts coming? That's not historically true. The only reason that's true is sort of like the idea of, they say, well, you know, people who have quit smoking are likely to get lung cancer. Well, no, they quit smoking generally because they're having health problems. Trust me, I know. And that's why after they quit smoking, they get a lot of health problems. Not they didn't get health problems because they quit smoking. They quit smoking because they had health problems, right? Usually, historically, when the Fed is cutting rates, they're doing it to spark the economy. It generally means it's trying to solve something that's already sick. And that is why the market tends to sometimes go lower when those cuts happen, because it's already addressing a sick economy. In our case here, those cuts, what happened was really quite miraculous and is actually going to be debated in economic classes for years and years to come, which is invariably, when you raise rates, particularly when you raise rates as fast as the Fed did, what happens is the economy contracts, right? It goes slower and unemployment goes up. That's what happens. And that is an antidote to inflation, right? It's hard to have inflation when unemployment is high and the economy is contracting. Simple. You basically, it's like chemo for the cancer of inflation. You make the economy sick to kill what's making it even sicker. But in this case, they raise interest rates pretty much proportionally faster than they ever have in history. I mean, just like extraordinary fast, except for in Volcker. And the economy didn't contract, and unemployment didn't go up. It just now started to showing signs that the economy is slowing and that unemployment might begin to rise. But this was against every possible theory and equation that they had, which is why the idea that we might do a soft landing or no recession is so unusual, because it's almost an automatic. If you're going to raise interest rates by 5 percentage points in a year, you're going to get a recession. It's going to happen, but it's not happening right now. You can debate to the end of the day what that's a testament to or not, but the fact of the matter is it's come to a surprise to a lot. And what interest rate cuts will do is spur the market on. But keep in mind, the market is pricing in those cuts. Whether or not they're pricing in too many cuts now, who knows? They're pricing in 4 cuts for next year. So if we get 4 cuts, well, that's pretty much the market's pricing in where it should be. If you get more than that, less than that, it all depends. It depends on how much they cut and how fast they're cutting. But that's really what you're kind of noticing. I don't know if you have any thoughts on that there, Pete, on the...
Well, price rules. I follow price.
Yeah.
You tell me what the Fed's doing. You show me the Fed reaction. You show me the reaction a day or two later. I'm going to know how to position myself because I'm keeping myself within a 3-month time horizon. And I just follow price action. I let the smart money tell me what they're doing. If you follow all these analysts and these gurus, you look at what their forecasts were for 2023, they're all over the board and they're constantly adjusting. Well, when they adjust, they move their money. When they move their money, I see it reflected in price. One thing I'll say about interest rates and historical price movement, blah, 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 is that in my lifetime, I could not conceive that we would have 0% interest rates. Okay, the Fed and the country are addicted to easy money. So that's something that we haven't seen ever. And I feel that as the interest rates go down, provided that the bottom of the economy is not falling out, provided that there's not a credit crisis, okay, for my educational materials, that is the 800-pound gorilla that changes everything. If interest rates are being cut because we are going into a financial crisis, whoa, baby, that changes everything. Then, yeah, we're going to make some money on the short side. But barring no type of credit crisis, interest rates go down, borrowing rates go down, companies use the proceeds from selling cheap debt to buy back their shares of stock. I mean, that's what's been happening for the last decade, 15 years. About half of the outstanding shares for stocks have been retired. They've been buying those shares back and issuing cheap debt. That's good for the market. It pushes prices higher. But again, I don't need to play economist. I'll let other people do that. Show me the reaction. That's all I really need.
Speaking of reaction, market dropping right now. Look what stock is going up. Uber. Uber continues to go up as the market is dropping. Yeah, this is definitely my long pick of the day right now is Uber. I would load up on that. I mean, you don't want it to get too extended here, but that's why there was a little bit of a sell-off yesterday. So that sell-off actually helps the bullish case. Really like that stock. Really like Netflix still short. And I'm actually short Apple from a few days ago. It had a nice bump up, but it's coming back down again. So I think Apple has a hard ceiling at this moment, and I'm waiting to see. I'm also using it as a little bit of a hedge. So I kind of have 2 hedges now on my long position, Apple and Netflix. I also have my VIX. Also have a VIX position on too. The VIX is incredibly cheap right now, so I got myself some VIX calls going out into next year.
I don't have a way of bringing up VIX, but I will bring up VXX. And there you can see that option implied volatilities. These are a little bit longer term than VIX, but they move pretty similarly. So you can see how option implied volatilities have continued to come down. So the perception was that we're going to get a year-round rally. There's going to be a strong market bid. No worries. We've got inflation coming in. We've got a Fed that's going to be pausing for the next 2 meetings. So there shouldn't be a lot of volatility. That's what was getting priced in. So if you have a long portfolio and you want to buy some cheap protection, then you buy some VIX heading into year end.
Obviously, I didn't get to, there's so many questions, didn't get to, there's I mean, look, we can do entire courses on the kind of mix here that you occasionally hear of fundamental and technical analysis. And, just so everyone knows, there's fundamental analysis of a stock itself, right? And that is where you're looking at the company health, you're looking at the books of the company, and you're making a decision as to whether you want to be a long-term investor, pretty much. Fundamental analysis has almost nothing to do with the short-term trade. And I see people out there justifying or not justifying a short-term trade using fundamental analysis, and it's absolutely absurd. And then there's fundamental analysis on the market itself, whether you're talking about extremes like a credit crisis, or you're talking about even powered by which sector. You're talking about if you look at the market as a company, the S&P itself is a company by itself. Then when you're doing a market analysis, you're almost doing fundamental analysis on that company. So there's a mix of it. Unfortunately, people aren't, can get very educated on one thing and then only slightly on the other. And then they start making these assumptions about what's going to happen based on only a little bit of knowledge. And if you think technical analysis is complex, fundamental analysis is like, forget it. And you could be like the best analyst in the world, don't get it right almost more than a coin flip on fundamental analysis. So that could tell you what you need to know there. Someone asked if you could, if we could define sort of a credit crisis, and Pete mentioned a bit. And essentially, a credit crisis means there's a shortage of funds to be lended, right? That lending, there's a drastic reduction in loans available, and you need loans. Loans are what keep businesses going. Loans are what keep individuals paying their bills, whether it's credit cards, whether it's bank loans, whether it's mortgages. Those are all loans. It's all debt. And when that dries up, when there's a lack of liquidity, when either financial institutions become wary, they don't want to lend money, whether asset values that have been used as collateral are declining so much that they can no longer be used to get a loan, or bank failures like we had with the regional banks, an overall loss of confidence. There's a million reasons. But when a credit crisis hits, that is something that could collapse a market, right? And has in the past. So that's why I think he called it an 800-pound elephant, because that is something that takes a long time to crawl out of and can hit out of nowhere.
So you'll notice SQ, I just had a alert pop up here. That was the alert that I set earlier when we had relative strength M5 versus the market. And then so you get that alert and you look at it and you go, wait a minute, how is this strong relative to the market? Well, you can see the market's gone down an awful lot. The stock has some red candles stacked here that's below the VWAP. Would I buy it here? Hell no. What do I want to buy it here for? Well, because it's got relative strength, Pete. Relative strength is one piece of the puzzle. Okay, one piece. It's one checkbox. What's more relevant to me is that the market is going down and that the stock has broken below VWAP. So if I were all antsy about gotta own it here, love it here, looks like a great bounce, instead, I set an alert. I give it time. I get the alert. Now I'm reevaluating and I'm going, I don't think this is a good entry point for me. Maybe I'll set another alert so that it's got to go back below zero and then above zero. And then let's evaluate when I get my next alert to see what the stock has been doing in the meantime and what the market has been doing in the meantime. Mistake avoided. Took me 2 seconds to set, didn't cost me a nickel. I have no working orders. I have no emotional attachment. So you should be using your alerts. When the market is in a low probability trading environment, don't go into chat rooms and start posting a bunch of bullshit. Be in there setting your alerts and working. You've got to constantly work and set yourself up for the next trading day so that even if today is not what you had hoped it would be, tomorrow could be. And by going in and doing that work right now, you're going to be setting yourself up for success the next day or the next day after that. With regard to credit crisis, sorry, go ahead.
I had finished me good.
I was just going to say, with regard to credit crisis, it is, bad loan defaults. It's credit tightness because banks are requiring a higher interest rate. They are not wanting to lend at all. You could go pound the street as much as you want and have what you feel is the best credit worthiness, and you cannot find anyone to lend you money. Can even happen on a sovereign level, which is very, very dangerous. And that we're talking about, for instance, in the 2009 credit crisis, it was the PIGS countries, Portugal, Ireland, Italy, Spain, Greece. Those were the PIGS countries, and those countries had to issue debt at very, very high interest rates because nobody wanted to buy that debt, and because the governments were running massive deficits. That is what a credit crisis is. And if you want to know how to spot one, when the XLF is getting absolutely pummeled on a weekly chart, that is when you're going to have your biggest potential worries. And this is a weekly chart, and this was during COVID. So yeah, we had some pretty serious concerns on what a pandemic could do because we hadn't been through one.
So everyone take a look at Netflix. That's relative weakness there. That's, you see that when SPY in the last candle, big green candle it puts in, Netflix going down. Now red candle, Netflix going down. The whole point is I get protected. All right, I take a short there, but what if the market goes up? What if it reverses? Well, as you see, the market did pop, but Netflix continued to go down. Why? Because it was relatively weak. That means I am protected on that trade. Uber, same thing. Uber was going up when they were in that green bar in SPY, but now look, SPY's heading back down. Look at Uber, continues to go up. So here you have two examples of two trades, one relatively strong, one relatively weak, and you see the power of the concept, right? Because I am protected either way. Market goes down, Uber's still going up. Market goes up, Netflix is still going down. Market goes down, Netflix is going down. Either way, my trades are working. And in worst case scenario, it'll give me a pause to give me a chance to get out without a loss. But that's the protection you should be looking for on the trades that you want. Now, if I were just in a stock that looked momentarily strong because it was with the market, then I'd be screwed right now. But because I took those two particular stocks, one long, one short, it protects me irrespective of what the market does. Obviously, I'd love to have the market tailwind behind it. It's going to make it go even more. But without it, I'm still doing fine.
Yep, and I love this. This is really nice price action. Why does it happen? How can this be? Well, a lot of institutions are out there. In this particular case, the index funds have to buy Uber. Okay, so that's why we're seeing that strength, is they've got a certain number of days that they have to add that stock to their portfolio. When it happens naturally, it's because you have large institutions who don't give a rat's ass that the S&P 500 is down in the last 15 or 20 minutes. They are buying this stock to add to their portfolio for a year or 2 years out. And that's why that relative strength exists. And we want to lean on that. That's our safety net. That is our edge. And so if we felt that the market was going to go higher right in here, and we bought the S&P 500, whoops, I'm going to lose money trading ES. If instead I had identified that Uber was a really strong stock and I felt the market was going to go up right here and I bought Uber here, I'm making money. How nice is that? It's like a weatherman who's wrong all the time, but he still gets paid, right? Well, it's nice to be in that position. You got the market wrong, but because you were in the right stock, you're still making money, and you've got time to evaluate whether or not this is a serious move lower, and you can exit the position and still be making money. It's just such a huge edge.
You know the stock I like here? I like Ulta a lot. ULTA. Look at it today. Look at it breaking out here. Off our earnings 3 days ago, continuing marching upward. I like Ulta.
I think that stock has a seasonal component to it because, you know, the wife has got to get her hair done before the holiday party, right?
Oh, I don't do holiday parties. I don't want to see these fucking people.
Well, let's see if we've got any kind of seasonality here. I seem to recall this stock doing well into year end. I could be wrong.
It should. I mean, it should be priced in a bit, but yeah, I mean,
okay, so there's your, you know.
I think it's got room to run. I think I'm also glad I sold those covered calls in the video right now. That's helping. And I'm up $1 on my Netflix position. Quite nice. 100 contracts, up $1 on it. I'm going to hold it until tomorrow. So I'm swinging that. I'm swinging Uber as well. So there you have 2 swings. And swear to God, Moderna, you better fucking stay above 80. Honestly, killing me. And yeah, we're
here's
getting
the tell on Ulta
going into the close. Wow.
Here's the tell on Ulta here is you've got the gap up, the entire gap holds. You got the stock opening near its low 2 days ago and rallying even after this monster move right here. And so most traders, most investors, novices, they're going to look at this and go, I'm not going to buy all the way up here. That's dangerous. And that would be and should be your initial reaction to it. But after you get to watch the price action the next day or 2 days, if there were legitimate sellers in this stock, blam, 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 right into this gap, they are not going to hesitate. But instead, those who would have wanted to take profits are still in there selling, but the buyers are overpowering them. And that's why you see the stock continue to move higher. Institutions want to own this stock. You're through that horizontal resistance on a day when the market is selling off. This stock is forging higher. Look what it did in the last hour. Look at that big drop in the S&P. The stock, grinding.
Okay, we're coming into the close here. And definite weakness going into the close. We're looking at pretty much a huge reversal off where we started today. And it's really being driven by tech. Just dropping, look at NVIDIA dropping into the close. Apple dropping into the close. I mean, this is, VIX is popping. You got huge sales coming, a lot of seller pressure now. You're seeing a lot of volume on the sell side too. Look at these bars. Look at these bars on SPY. Look how much volume we're getting on the sell side.
They're starting to build in here also. So, yep, getting some momentum in here. And again, you know, this, when it was making a series of lower highs, eventually the programs kick in and the buyers just pull their bids. And then you get this whoosh into the close. I'm going to go back to the 29th. So, folks, we're going to wrap up this session. You can see here, this is the 29th.
Would you short SPY here, Pete,
a week ago.
Tomorrow?
No, I would not. No, I am kind of staying to my guns that I think tomorrow is going to be a dead day. I think that we're going to waffle around and try and hold the bid, and the traders are going to see how that jobs report comes out Friday. And, you know, until I see negative reaction to that jobs report, I'm going to be expecting that we continue to push higher. We'll see. If I'm wrong, it doesn't matter because my swing trades are longer term and they're fairly limited, so I haven't loaded up on them by any means. Day trades are exactly that. You're pretty well balanced. It looks like you're ready to buy some S&P puts.
What's that?
Are you inclined to buy some S&P puts? I know you got some shorts on and you got your
Yeah, I was
call,
thinking about
so.
buying some SPY puts at the what do you call it? The 457 puts for Friday, just to cover. But I don't know. I mean, I'm looking at this drop into the close, and usually when you see a drop with this accelerated selling, you tend to see some follow through the next day. But I don't know. I mean, it depends. I mean, if you have a lot of long positions on, it's a hedge. Obviously, it's not a bad hedge to do if you have a ton of long positions. But I don't think it's a necessary play to make.
Yeah, I think this is what you're going to see. There's your sell-off on the 29th. I think this is what we do tomorrow. We kind of probe around and see if we can continue to build on that late day selling. And you can see on the 29th, we had very, very nice volume right into the close. And so it took a day of rest, which could be tomorrow. And then there's your price action afterwards. So I don't know that that's going to repeat, but I do think that asset managers have missed a bit of the boat in here on these big gaps. And I think that they're going to keep the bid pretty constant out there. We'll see.
Yep.
As far as the weekly live events, it's been fun to do. I hope we can get one going every Wednesday. That's kind of our intent, and maybe do them even earlier in the day, like from maybe 2.5 hours in through the kind of the lunch hour. So that's going to be our goal. Please leave your comments. Let us know how you like the event. Let us know what else you'd like to have in it. There are probably going to be better ways for us to gather questions. It seems like there's no shortage of them. You had a bunch of them, right, Harry?
Yeah, I still got a ton. So yeah, absolutely. Let's plan every Wednesday. I think we were going to do 9 a.m. Pacific time, noon Eastern time. Last time I had a doctor appointment today, but we can do that schedule. I think that'll be good. All
right, everybody. We'll look for that on our respective YouTube channels, and you'll be able to turn on your notifications there and join us each week. And we're going to try and get this going and have a full head of steam going into the new year. So thanks so much for watching. Thanks, Harry.
Trade
See you
well.
soon.